Welcome to Trade Live with IG. I am joined by Mr. Richard McDonald this morning. Pleasure to have you. Thanks for coming in.
Good morning, sir. How are you?
I'm very good, thank you. Very good indeed.
The last time you were in this studio, my friend.
I heard we're having a bit of a renovation around here.
Renovation, bit of Phil and I next week are going to be plastering the walls.
Love that. So you rewind back when we first launched this studio, like 10 years ago.
Yeah.
And the kind of the PR around our then CEO actually painting the walls, and that all went around for internal comms.
Really?
Yeah. Yeah, well, I think we need to put some pressure on the top brass here, see if we can get the same thing.
Good luck. Right, so what's coming up on today's show?
I'll be here through till 8:30, but I'm joined by Angeline at 8:15 for a little section of fast markets. We'll get the opening bell for you at 8 o'clock. Then Garth McKenzie is going to be joining us at 8:30 for Experts Edge.
We're going to be talking all things trading there, and then the man, the myth, the legend that is Piers Buckworth is in. US tech stocks melt up, he called it when we spoke this morning, and a melt up it truly was yesterday, apart from Nvidia. So Tech Focus is going to be taking us through to 9:35.
Then you've got Axel with Charting Crypto, 9:35, back from his 3-week holiday.
Which sounds like he had a great time.
Oh, yeah. You may not know this, but he's a keen scuba diver, our Axel.
Scuba.
Scuba diving, yeah. So he'll be back in probably to tell you some stories about that and tell us what on earth is going on with crypto. Speaking of melt up. So we'll have to see what he says there. So tune in at 9:35 for that.
Good. Right. Looky look. How are we doing?
We're good. Feels like it's been a while since you and I have been on the air.
I think about 3 weeks, I reckon.
I reckon you're probably not wrong, because I was with Ange last week. The week before that, I was in Scotland.
Aye.
And I think the week before that, it was like a Monday. So it was just it's been a couple of weeks.
Now, an exclusive. I will be in Scotland next week doing the show live from my dear mother's house in Bonnie, Perth. So yeah, I'm going to be doing the show in the morning and then going to the Fringe Festival in the afternoon.
Oh, excellent. Lovely.
So yeah, very excited about that.
We made a stop. So we did a week in Aberdeen where my in-laws are. And I did a stop on the way up. So stayed in Edinburgh on the Friday night and then did a stop on the way back down again just to make sure that we could get 2 days for the Fringe. It's good fun.
And yeah, best show?
Well, we had the dog, so we actually didn't get to see anything. But we saw some friends. We were able to kind of walk around, get some drinks, and see the street
Get the
performance.
vibe.
Get the vibes.
Oh, wow.
I didn't know we had
That's very realistic.
Hang on, give us that one again.
So this takes me on. So my
High quality show this morning.
My best buddy works for Levi's. Used to work for Nike, actually. He was about 12 years at Nike, running their European sales business. And now he does the same for Levi's. He is staying with me for a few days with his golden retriever.
Okay.
This thing's huge. I'd call him Aslan.
Yeah.
So we took him round Hyde Park last night, and he like literally pulls you along, and you just have to let him go. So of course he was chasing the squirrels all over the place and everything.
Yeah, of course he was.
But yeah,
good boy.
Loving having the dog in the house.
It's the best. They are the best. But yeah, it means you can't go to any shows at the Fringe, which is
Right.
a little annoying. But it was up there. It was beautiful. It was like 25 degrees, 26 degrees. It was beautiful.
Couple of wee whiskies.
Couple of wee whiskies. They've made Iron Brew beer now. So beer that tastes like Iron Brew. And it's an Aberdeen-based brewery whose name skips my mind at the moment. It's called like...
I can imagine it as cider.
Fireside Brew or something.
I don't know if I can imagine it as beer.
Yeah, it's like a scrumpy. It's kind of like a clear-ish, obviously orange brew. Anyway, it actually tastes pretty good. That's coming from an Englishman.
Right. We'll see about that one next week. Right, so who have we got in the house? Shilling. Good morning to you. Yeah, I can't read anything because Angeline's all over it. Friar Tuck, a very good morning to you and Boise. Neil is in the house. CPI numbers were fantastic. Honestly, let's go into overnight action and talk about Trump and Goldman's. So Jan Hatzius is a German-born, he was born in Frankfurt, economist who works for Goldman Sachs. He's been living in the US for a long time. He studied in the US. And he is now front and center of the attack from Trump because he dared say that tariffs may be negative on inflation. And Trump had a crack at David Solomon, told him that he should maybe just stick to DJing. The head of Goldman Sachs. So now Trump sacks his head of Bureau Labor.
The Bureau.
Because he doesn't agree with the numbers being weak. He now has a go, obviously, at media about the fake news. And now anybody who speaks against him, then he's having a go at. This is truly the Democratic Republic of America.
It's empiricism, isn't it?
Yeah.
It's the emperor's rule under. He's elected, he's got a mandate, which is the way he's going to view it. He's been elected, he has a mandate, he's driving the mandate through executive orders. And where it's, not that democratic in the sense of, it would kind of, it is though. That's the Americans voted him in for these types of policies.
But what's next, do you think? What would be where's the red line of what he could do if he started arresting journalists or arresting some of the Democrats?
Yeah, well, he's already threatening that he's going to put the army on the streets of DC, and he's done it in LA as well. Don't forget.
Yeah.
So he's starting to kind of lean into his martial powers.
What's the red line?
I suppose the red line is where does he get unstuck? Where does he do something that isn't allowed? And he can't wriggle out of. That's the question.
Do you know what I saw at the weekend?
Because you're always going to be able to kind of, through the way that we speak to people now, through Twitter, through his Truth Social, you can get the undiluted version of what they want to say from them.
Yeah.
And everyone's going to get a notification at exactly the same time. This era of public communications is now very controlled by the most influential people. Is that not the same as where we were 10, 15 years ago, but through the newspapers? And so everyone was kind of back-channeling things through newspapers where they had a political tie to. We're just speed running that. So we're noticing things a lot quicker than we were 10, 15, 20 years ago.
Do you think he writes it and presses send?
No, supposedly he has someone that he scribes it to somebody. Someone else does it.
There's too many mistakes in it.
But this is the thing, right? So he has someone that follows him around the whole time to kind of just bleat this stuff out. So I've read. The truther, but they have to say exactly what he says. So the pauses, the stops. You know how he talks, right? Can you imagine can you try and interpret when that's a comma or when that's a full stop or when it's a all caps rage? I don't know.
Right. What are the odds of Donald Trump being impeached before the end of his reign?
Again?
There is actually a market on this. You can bet on this.
Is there a poly market?
Stop looking up poly market. No, this isn't.
No.
This is what we can bet on right here in the UK. This is on Betfair.
Okay.
What is the percent? Let's put it into percentage. The percentage chance of Donald Trump being impeached before the end of his reign.
I'm going to give it.
Let's do a poll.
Okay. I'll give you my thoughts after we see the poll. So what do you want to do?
Okay.
25, 50, 75, 100? Four.
Well, it's clearly not 100, is it? That's when it's done.
Completely.
So, yeah, 15%, 25%, 35%, 45%.
And then time will tell. You were going to, while we're waiting for that to come.
So did producer Phil get that? Was he listening?
Yeah.
Excellent.
Does anyone want to look at boring tables?
Two-tier Kia is saying 0. 0.
You wanted to talk about CPI and inflation.
Now, this isn't what you think the chances are. This is what the official odds are on Betfair. And if you think it's 0, you can make a lot of money, my friends. Back it. Put your money where your mouth is.
Go short. Those odds. Yeah. Okay. CPI.
Yes.
So CPI came out, of course, in line yesterday. Pretty much in line. The month-on-month figure was a slight increase, but a little bit more than the market was looking for. But the core figure is what was the concern. This table might blow everybody's brains out, but let's take a little look at this. So this is when I was asked last on the show, we were looking at the UK CPI. And the UK CPI website, they give you, it's a bit more graphical. You can kind of see what the inputs are. It's a little bit easier. This does look a little bit grim. What you see here is the year-on-year change figures and the month-on-month change figures of what it is. Okay, So month on month, you've got lots of these 0.2, 0.5, 0.6s, up, down, kind of you end up somewhere where it hasn't changed that much. But these year-on-year figures is where it gets quite exciting and interesting. So we know that people are paying more for things. It just feels like we are, right?
Definitely.
How does that come through in the data? So what they're saying is there's been a big reduction in the energy costs. So you're seeing kind of nine percentage points reduction in the likes of fuel oil and motor oil. Utilities, gas is up 13.8% year on year.
Wow.
Electricity is up 5.5% year on year. Energy services up 7.2%. So whilst the raw costs that go into these things are going up, is coming off, the actual cost of what we pay for our utilities is absolutely flying. Sorry, what the US pay.
So that's obviously all in the core, and that's why the core was higher than expected. Market completely ignored it. Of course, doesn't matter what the core is, even though that's what the Fed looks at.
Yeah.
Nope, market thinks now 92% chance of a rate cut in September. So what was in the core inflation that had it higher?
So core is everything you strip out food and energy, I believe. So we strip out food and energy, things like shelter, things like medical care. You've got shelter is up 4% across the year. You've got things like tobacco's up 6.5%, vehicles up 5% year on year.
What was the all-important property?
They call it shelter.
Shelter,
that was up 3.7% year on year.
3.7. Okay, so
yeah, which is
coming
enough.
down.
It's definitely enough.
Yeah.
And I think this is the problem. So you're noting, like, we call it Main Street, Wall Street, right? Main Street, i.e. people that are paying their bills, are seeing these price increases. But because you've got softness in other parts of the calculation, the actual headline figure doesn't change necessarily. And that's this kind of dichotomy we're having at the moment between Wall Street and Main Street.
Just to answer the question, on the poll, it's the end of His Majesty's reign, right? End of the dictator's reign, not the end of the year. So 2028. We talk about CPI and shelter. Lost train of thought. Lost train of thought.
The point I was making is, for people on the street, they're feeling the pinch more so than it seems to be coming out in the data. Now, what I couldn't see through this was things like the things that are being heavily tariffed, because the whole point on this is where are the tariffs starting to come into play?
The $1 trillion of tariffs, because the US has now made $1 trillion from tariffs.
Correct.
That was ratified by Trump in his Truth Social post last night. The US. So who is paying that $1 trillion, Luke?
I mean,
the American companies and the American people.
Of course, but where is it coming through in the figures? So where would you expect it to come through? Vehicles, perhaps, through supply chains?
It hasn't yet. So all the front loading that was done means the companies have managed to get stock in, and they work through that stock, and that can be 3 to 4 months. So they're not putting up prices yet. Companies, they don't have to take it as a margin hit yet because they bought the cheapies.
So they've still got stock to sell.
But prices in the second half of this year, in the fourth quarter, are going higher and higher. And that's where your 3.1% core inflation, right, with a 2% target, is expected to go higher. So that could be more like 3.4 by the end of the year, going the wrong way. But the market is now pricing in 1.25% of rate cuts in the next 18 months.
Can I share a chart that was on the on Bloomberg this morning?
Go on.
You love it when I bring charts to the show.
I do.
Studio, don't you?
You're the only one that does. Ronnie's too busy with the girlfriend.
Yeah, I know. I'm the only one that does my homework. This was, so can I zoom in on this? Yes. So this was on the Bloomberg Daybreak this morning, which is a note that everybody who has a Bloomberg terminal gets. This is the SOFR options, so futures that trade on SOFR rates, the open interest in options. The pink line is effectively a 50 basis point cut, and the yellow line is a 25 basis point cut. This is the way you need to think about this.
Got you.
So who is building positions in speculation of the rates to be cut? Where do these pay out? Well, the yellow line pays out if it's a 25 basis point cut. The pink line pays out if it's a 50 basis point cut. And you can see that move since June. I mean, I don't necessarily need to worry about what it is now, but the open interest in these things have absolutely exploded since the start of June.
But obviously one is very expensive and one is very, very cheap.
You would expect so, correct.
So-
which is probably why the cheaper one has overtaken
Exactly.
the open interest.
Yeah.
in
It's
the
like a
US.
lottery ticket, isn't it? Because there's no way that you're getting a 50 basis point
Correct.
cut.
Yeah. And this is it. It's a big lottery ticket, and a lot of people are buying it.
Right, let's have a look at the. Do you want to do the Financial Times? I'm not sure if we're allowed. Do we need to age check the viewers to know if we can?
We were wondering whether we might need to put an
Go
age
on.
verification check on the show this morning.
Yeah. So the front page of the Financial Times is talking about, of course, that global stock extending the rally, and also
There's only one story that you clicked on that homepage.
the one with Keir Starmer on it.
The one where your mouse currently is.
Asset managers fight for retail access to catastrophe bonds. We covered that a few months ago, actually. But yeah, just scrolling down there. Dog walks and women on motorbikes. Iranian sees more daily freedoms after war. Is that the one you mean? We're talking about dog walks.
Talking about dog walks, yeah.
There he is. Who's his mate? Is that his truther?
I don't think so, no. Although she was in Scotland opening the golf course, I noted when I was up there.
Ah, no, sorry.
the,
This
motorcade.
guy,
Oh.
maybe he's the one that writes the
Sorry.
tweets.
Not Levitt. Yeah, he looks like a bit of a tweeter. Who is that?
It looks like a bit of a tweeter.
Who is that?
Wow.
Is that no, that's the guy who's doing all the trade deals. His name skips my mind. I'm pretty sure he was standing next to him when we announced the UK trade deal.
Greer.
That's it. Yeah, that's Greer.
Right, what about...
I don't think he's the tweeter.
we bit more PG rated on the Times this morning. Now, how much of a mess is this country in when we're selling our water supply to Chinese infrastructure firm? Because the government cannot afford to rescue Thames Water. They're going to offload it to the Chinese.
I know. I saw that this morning. It's pretty crazy, isn't it? So
It's really worrying.
it's supposedly going to be within weeks, according to the Times. So CK Infrastructure Holdings has emerged as a leading contender to take over.
Now, they do already have other holdings in the UK, don't they? They already hold, is it Northumbrian Water, Hawaiiman, and UK Power Networks.
They're pretty big.
So, they do have holdings. But reminder, this is the company that Trump forced to sell one of the US infrastructures. So, there is precedent there,
There's political pressure.
political pressure that...
Well, if they already own
controversy.
UK assets, these guys clearly aren't under the same immediate pressure because they would have been forced to do something already as part of a trade deal or as part of some kind of footnote.
Controversial, I know, for some of our viewers, but I don't think Northumbrian Water is as much of an infrastructure risk as Thames Water is.
Potentially not, but UK Power Networks, which I believe own pylons. I think they own them.
Yeah,
I think they own them and kind of.
It's not the national grid, though.
No. But I think they have maintenance contracts on all the pylons.
Right.
So if you were going to do any nefarious things, those would be the things you would wiretap.
I mean, we complained about Vodafone doing a deal with Hutchison,
yeah.
but we're going to give them Thames Water.
Yeah, we'll complain about anything.
But of course, China's not a security threat anymore.
No.
All you got to do is pay 15% of your sales, few billion,
And you
all
get
good.
done.
It's all good.
Yeah, 15%.
Yeah.
It's
So
VAT.
maybe the government,
VAT, that's what it
if
is.
the government gets 15% of the profits from Thames Water, which are zero, then maybe we're okay.
Well, hang on. Can you use the loss as a tax write-off to help us with the deficit? Is this some big brain thinking that Starmer's doing? Reeves is sitting there going, right, how can I write something off?
Well, this is one of the problems, actually, and Poppy can help us on this because Poppy has had experience in this situation. If you are the UK institutions that hold Thames Water debt, the question is, are you going to wipe them out and then sell it to the Chinese from the government? So what are they planning to do?
So what, just default on all of the...
So Poppy had this with Railtrack. So Railtrack was going to default on all its debt and give everybody zero, which Poppy was a significant holder of through his company, fund, sorry. And I think it was something like 50 million. And went to the government and said, you realise as far as we're concerned, Railtrack was as good as UK government debt.
Yeah.
And you are now screwing us. So if you want us to buy gilts in the future, then that's very questionable.
And did they go ahead with it?
And so they got paid out.
Interesting. We'll see how that unwraps then. That will be interesting to see how that unwraps.
Yeah. So, yes, there he is. So very difficult to upset institutions. You then want to buy gilts.
Yeah.
And that is very much, that point is made in the article.
Andrew McKelvey, you've quite rightly corrected us or given us a bit more information. So UK Power Networks own the regional electricity supply system in at least 1/8 of the UK. Good.
Sorry, I'm just trying to find when it confirms in here what would happen.
While you're looking at that, do you want to run through some of the
yes, please
stocks that we've run through this morning? So this morning we've had updates from Balfour Beatty and Beazley and Persimmon. So we'll start with Persimmon there, the home builder. So their pre-tax profit came in at 146 million, beating their estimates. They've maintained that their full-year homes completed. They've maintained their full-year guidance on the homes that they've completed. They remain confident of further growth in the outlets. I'm just going to pull up a pre-market call on these ones. So our friend at Singers are calling Persimmon up to be 1%. Balfour Beatty, they are being called down 2%. Their pre-tax profit of 95 million beat on estimates, and they've said that they're on track to receive full-year expectations to finish this year. However, and they are remaining positive on their longer-term outlook. So they are, they're being called up 1% on that. Beazley were being called down 2%, which was where I made the mistake. Profit before tax, 502 million, beats estimate. However, they've reduced their growth guidance to low to mid single digits, reflecting current market conditions. So watch out for those guys. London Stock Exchange, who don't yet sponsor our opening bell, they've been tipped as a buy in the Telegraph, saying the stock market is not efficient. This company proves that it's not efficient and is a buy. I haven't put a price target on it yet, but what I can see, so that's interesting.
Right, I did find, if we just throw up that quickly. So the quote is in the Financial Times, it would look like the government is siding with one institution with close links to the Chinese state at the expense of blue chip UK financial institutions, they said. So that is the warrant. And as Poppy's saying on chat there, he managed to get the Chancellor to change the Railtrack terms, which is just fantastic. So, right.
That's excellent.
What other moves do we have this morning? Evoke up 2%.
Evoke up 2%. We've got their Q3 revenue is in line and the momentum is accelerating into the second half of the year, and they remain on track to deliver their full year guidance. So solid.
Excellent.
Solid. What else have we got? We've got CLS Holdings, not a huge name. Lettings increased by 17%. Their portfolio valuation, however, was down by 1.6%. I don't have a pre-market on those, unfortunately.
Ooh, Andrew pointing out Shoe Zone. Like, I know this is one that Michael Taylor, friend of the show, looks at closely.
Early calls down 25%.
Whoa, at last.
25%. Good spot. Challenging conditions in June and July. Their adjusted profit before tax is 2.5 million. They are withdrawing their dividend policy. However, they're confident of their long-term strategy. Ouch.
So we stood outside a Shoe Zone, Michael, myself, and 6 of the people that he has, he helps and teach.
Yep.
And he was having such a rant, I felt like going short them. Because he was so convinced that the Shoe Zone was just complete and utter, just terrible business. Yeah.
But that's just a company that is going to have its business eaten by websites, right? Shoes. I don't know what you go to Shoe Zone for. Is it school shoes?
To buy Crocs.
Is it like trainers? Is it? Wow. I wouldn't know what you'd be buying in Shoe Zone. In fact, I'm going to Google it.
So, producer Phil saying, yeah, it's shoes, mate. Right, when Luke is having a look at that, let's go to your chart of the day. What are we going to have today, sir? It's a Democratic Republic of the United States of America
Go
stock.
I'm just looking here. It is school shoes, and I've already been offered £5 off if I buy my shoes on their website. Great.
Desperate. They're only £10. Yeah. Right, 3, 2, 1. Hamish, go and make a cup of tea.
Well done, Jugger. It was indeed Boeing on the chart of the day. That song is... It reminds me like I'm playing Grand Theft Auto, like cruising along, listening to one of their radio shows. I think we need to get the actual MP3 of that and just like share it with people because it's fantastic.
You could actually be cruising along like Pacific Coast Highway, listening to that kind of thing. Boise, am I still expecting an S&P dip even with 3 rate cuts now expected? You've answered the question yourself, my friend. If it's already expected, then it's in the price.
Correct.
So,
Correctamundo.
Yeah, Hamish was busy. That's funny because they cut me off early, Hamish, and I said, Hamish, go and make a cup of tea and give other people a chance this morning.
He was making tea, there you go.
Yeah.
Boeing hasn't gone anywhere in 2 years. That was what I was trying to look for. Where has it not moved in 2 years? Right, I'm going to look at Shoe Zone.
It's on a delay. Delayed at departures.
I'm surprised. Do you know what? I'm surprised it's not better bid than that, considering they're being paraded around as part of these trade deals. Everyone's going to order billions and billions of dollars worth of planes. I'm surprised it's not moved more.
The planes crash, don't they?
Yeah, they're true. They do. Bits fall off.
That's why.
Shoe Zone indicating down 41%.
It's painful.
In the auction. Watch out. Back to school for them. There you go. No.
Getting schooled.
Getting
right.
schooled. Okay, keep an eye on those.
Bell in your hand, sir. Or shall I ring
will. You can have a little look.
it?
Persimmon's indicating flat. Beasley is...
That's better.
you go. We're going to have an extended auction in Beasley, not open, indicating down 5.7% off the back of those news, of that news rather. So keep an eye out for those. I will watch to see where they are.
BAE is up 1. BHP up 1% as well. AstraZeneca, 75 basis points. Yeah, all of them much. Are there any big fallers in the big stocks? Persimmon, down 2%.
Persimmon down 2. Canal Plus in your FTSE list, is it? Yes.
Well, this is more stocks of interest.
Yeah, okay.
Including Iron Brew beer.
Yeah, there you go. Beasley still not open, so we're going to give those a couple minutes there. What is going on at the top of the pops? Fresnillo, BHP. So have we missed something in the mining space there? I know that the lithium kind of mining trend has been big this week. A lot of those plays have been moving.
Let me check iron ore really quickly. Iron ore was unchanged overnight, so nothing big there.
And gold and silver are silver's up 1.2%, gold's up 0.3%. So Fresnillo, one of the biggest silver miners that we've got in the UK, so potentially getting some bid there. Ocado, 1.4%. Now that probably would be a story. That's a UK tech play, really, isn't it? Platform play.
Yeah, nothing major. Let's see if there's anything in Europe that's a bit more exciting on this beautiful morning. Did everybody manage to sleep last night? I woke up about 4:30 unfortunately, my bedroom's the part of the house that the sun heats the most. So the living room's nice and cool and the bedroom's boiling.
You've got to get yourself an air conditioning machine.
I did it. One that's just very noisy.
It is loud, but it's kind of like people sleep with white noise. So I'm kind of trying to train myself to sleep with it going off. I mean, when the room becomes a nice 17 degrees, I'm pretty sure I'll get over it.
Yeah.
Anyway, best couple of nights.
I might try that this evening.
It is definitely worthwhile your investment, not a sponsored link.
Right, European autos, I am having a serious thought on whether to just short these, close my eyes and be short them until they are another round of profit warnings. But it's tricky, isn't it? Rheinmetall up 2%. Rheinmetall slowly gathering back. It's 20% off its highs. It's in a bear market, Luke Moore.
Yeah, well,
what's German for bear market? Let's check.
You can check. Look, I think that might be moving off the fact that this Friday's supposed meeting between Trump and Putin is already having the expectations kind of walked back. According to the Financial Times this morning, it's going to be a listening event to kind of hear what each other want, not a policy-making event, because of course Zelensky's not invited. But that may well be...
It's just an excuse to keep Zelensky quiet for a few days.
Out of it. But maybe that's the reason why it's kind of picking up a little bit. I mean, it's volatile, down 1.8, 1.5. That thing can move around. Luxury's Keyring's up there. Hermes is up a little bit.
Here we go. Ready?
Go on.
Besa.
A Besa.
Is that bear market or just bear?
Bear market.
A Besa.
Yeah. Well, it's typical, isn't it? Germans so efficient, they have a word for
everything.
A bear market.
Yeah.
And then a bull market is a hausa.
A bear market is a hausa. A bull market
is a hausa and a besa.
And a besa.
Yeah. There we go. Jugger, tell us we're wrong.
Keep an eye on that. I was actually just looking at Ocado. Bring Ocado up while we were waiting there.
Yes.
What a move this has had in the last couple of weeks. It's gone from £2.30 up to £3.56. You have a look. Where's that gone? It's actually gone to flat. So you might have to want to run a quick search for it.
I think it was just a bit of a wide spread this morning.
Yeah, potentially. But that has had one hell of a move off of its lows at 2.33, and that's probably gone under the radar, I think.
Oh wow, completely. You're right.
Completely under the radar.
In 2 weeks, 3 weeks.
That's a huge move. That's moved what, 40% in 3 weeks?
Did it have numbers?
Upbeat on their Krog relationship on 17th of July. When did that move? That moved on the 17th of July. Yeah. So they've reiterated on the 17th of July.
Half-year results. Half-year results, 17th of July.
Yeah. They're expecting to sign new partners with as exclusivity terms end, say the CEO. And they're upbeat on their relationship with the US grocery partner Kroger. Okay, so that's just been a story that's had, well, 2 to 3 weeks worth of move there. Fair play. Good for them.
All right.
Let's keep an eye on Beasley as we're getting up to that 5-minute window now, indicating down 6.5. And while we're waiting for that, I've just had a text from my wife. Fierce Brewery is the name of the Aberdeen-based brewery that makes Iron Brew beer.
Nice.
There you go. Let me see if I can get you a nice picture for it. Fierce.
I'd be fierce after having 5 of those, I think.
Fierce.
Beasley is open.
Beasley's open down 6.3%. It's actually nice. It means that my wife is watching the show today. Good morning, honey.
Good morning, Mrs. Moore.
Here we go. Fierce Brewery. You can have a little look at that whilst we are waiting for Beasley's to continue to go down. There you go. Get yourself a can of that. Iron Brew beer.
That looks really healthy.
I don't think it is.
Is it? Do Iron Brew get any money for it? Considering we look at AJ Bar.
I don't know. I've no idea. Iron Brew. They call it a beer cooler. They're not quite a fully fledged beer. There you go.
They spell it wrong. Somebody else did this, like, Aldi or something, spell Iron Brew like that, so they don't have to give any money to.
Yeah, but that can is pretty close, right?
Yes.
That's a bit of a rip-off.
Graceful. Right, Beasley there, we've got, looking at £8, well, it's trading 8.49 to 8.52. Bit of a spread there, but down from £9.12 last night.
So let's just go through those numbers again. So they beat on their profit before tax, 502 million, beat on their estimates, but they've reduced their growth guidance to low to mid-single digits, reflecting current market conditions. And the market clearly hates it.
Back to where it was on, well, not quite the April lows, but where it traded around in that April. It'd be an interesting one for Axel, that actually, because it was resistance and now it's support. But is it support? That's the question.
It'd be interesting to see that because, of course, Beasley are an insurance business, a specialist insurance business. So why would they reduce growth on a forward-looking basis for in the insurance market? I suppose insurance...
Sorry, I'm on the completely wrong company. I thought this was a home builder.
You're thinking of I don't know who you're thinking of. I did Google it because I also wasn't sure exactly what they did. But they're a specialist insurance business with operations in Europe, the US, Canada, and Latin America and Asia.
God, I've never traded this.
Are proud participants in the Lloyd's of London market. So they're specialist insurance.
God, they're trading like Legal and General and everybody as well. Then look at that. And Aviva. So very similar to Aviva graph.
Wow. Do they yield like them though? Because that's what a lot of people buy these insurance companies for. Let me have a look at their dividend yield. Dividend yield is only 2.7%. So no, not really, not particularly.
Let's have a nice look at those commodities. Oil. Oof. Where do you think this bases outlook?
Here. It's been around this level for a while now, isn't it?
No, it's 66, 67 a couple of weeks ago.
Yeah, but I think anywhere in this kind of mid-60s. So it's not breaking lower, and it's definitely it hasn't been breaking higher. And we had production cuts from OPEC fairly recently, or a commitment to not
increases.
Okay, a commitment to increase, and we've seen it weaken a little bit. But look at it; it's been, I'd argue, that's kind of flat as a pancake, trading around the mean for the last since March.
So Tom Price, of course, on the show 2 weeks ago, the #1 commodities research guy in the UK, in my opinion, he told us Russian oil coming back into play, if there is an agreement on Friday, will not affect the oil price. And that is the concern. It could affect the gas price, but it will not affect the oil price, because let's face it, everybody's buying it anyway. They're just shipping it a different route.
They're just changing different labels, aren't they?
So, if there is some weakness there, remember, we're in a strong economy. We're in a Trump economy. This, on the podcast, you heard Goldman Sachs and Spice told us that you could see up to 4% GDP next year, right? $62 does not equate 4% GDP growth.
Yeah, but neither does 76. 76 feels restrictive almost. So it's trading in a range. For me, there's not a huge amount of interest in it as a space. What's more interesting is that, you know, does Shell stay in play? Does BP stay in play with that story? Do you continue to see these mergers come through? You know, it's not going away, is it? It's definitely not going to go away.
Beezer Homes, that's it, maturing. Thank you very much. Beezer in Beasley.
Oh, there you go. Okay.
Good stuff. Right, time for Angeline to come and do fast markets. Mr. Moore, I'm going for coffee with Pete Ward quickly before Garth McKenzie joins me to talk markets.
Lovely. Better be quick. 20 minutes. Off your pop.
Like and subscribe. Like and subscribe.
Like and subscribe.
For Luke Moore to get a new shirt.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Hey, Trader Friends, welcome back to Fast Markets with myself, Luke. Wow, we've got the poll out.
Poll's out.
Come on, let's get
Poll's
it up.
out. We've switched seats. We've moved on to the other side of the studio.
Like Clark Kent and Superwoman here. It's super fast. We get things straight to like just this poll result here. Let's read it out for our trader friends.
Let's have a look. So we were talking on the part of the show. What are the chances of Trump being impeached by the end of his term, not by the end of the year? And we've got 0% is 60. So the 0% chances are 68%. 2/3 of you think that he's not going to be
I'm
impeached.
trying to put my hand up. I was one of the 0%.
Okay. 15% of you, sorry, 13% of you say there's a 15% chance. Only 10 give a 45% chance. And weirdly, we've got 25% there at the bottom, 7. So it looks like you don't think it's going to happen.
Yeah, I mean, it's just going to take too long. I mean, and the thing is, even if he does get impeached, it's going to be a long, drawn-out process, you know. So even then, the impact's not going to be very quick. But I don't think he's going to get impeached, at least this year.
No.
Right.
We'll have a
Good
look.
morning, trader friends. Good morning, Jugga, Marco Polo, Maturin. I think you're right. I think Rich was thinking about bees. How many of you out there, I know Luke was enjoying it when we had the Guess the Chart drive-by song.
I love that song so much.
Oh,
I'm proposing we release it on Spotify and let you do your damage. Put it in your playlists.
Speaking of which, there was a story yesterday at Cross, and I
There
thought
are.
of you straight away. The
There are.
perplexity.
The perplexity story
AI.
was indeed
It's
interesting.
a journal that broke it first.
Wall Street Journal. Yeah, the Wall Street Journal. Now, you've told me that you've got a
much.
nice little infographic. And
Yes.
Stephen, I've seen your comment on Circle. I think it's worth talking about that as well. So let's do the Google story.
Yeah.
And then we'll talk about Circle in just a second. There'll be our fast markets for you today.
Let's whack it up, people. There we are. So this is the big news out there, and the cheekiness of it as well is, you know, Chrome is not actually up for sale.
But there is stories to it. So the news that broke last night, Perplexity, of course, one of my favorite AI tools out there as a search engine to gather data. They're doing a lot of work in the finance space. They raised money recently at an $18 billion valuation. Now, the interesting thing here is who is backing them. They are backed by Bezos. They are backed by Nvidia. They are backed by SoftBank. They are backed by lots of very interesting people that you've got down there on the bottom right. Now, what have they done? They, in themselves, have got a web-based app. They've also recently launched a browser themselves, Comet. Now, their whole purpose of this, and when we've spoken about the AI story in the past, it's all about distributing AI, right? How can you get the mum and pop user to interact with it so that they can sell you advertising? You know, the ChatGPT is probably one of the most popular app in the world. You know, Grok's, what we're seeing is Anthropic are releasing a model, then Grok are releasing a model, then all these places are introducing.
It's getting crowded.
It's getting crowded, but the winner is going to be who can distribute it and get more users. So what this is a moonshot. So they have bid $36 billion, and you're right, that's $36 billion. A company that's worth 18 is bidding $36 billion for Google's Chrome business. Now, why is this a big deal? It's a big deal for one, right? It's a lot of money. They're punching above their weight. It's a moonshot, as you mentioned.
34.5 billion.
Sorry, 34.5 billion, right? Let's get the numbers right. But why are they doing it now? They're doing it now because Google has been through a DOJ, Department of Justice antitrust ruling, saying that they have a monopoly or close to a monopoly on search. So what do they do about it? The DOJ last year suggested that, and I'll just get it up on my screen here, suggested that they will, sorry, it's not search. They've got an illegal advertising monopoly. And that was a ruling in April of this year. However, in December of last year, they proposed that you could divest Chrome. So if you sell off Chrome, that would work. And in the letter that Perplexity sent to Chrome, it was like, yeah, this is a ballsy shot. Take it or leave it. But we know you might have a problem around the corner. We're a willing buyer.
Yeah.
Come to us.
I think the price, the bid rather, is going to go up because, you know, Chrome, as I mentioned earlier, is not actually for sale. So they're saying we are going to
Take it off you.
suit up, and we're going to also fight, you know, any antitrust ruling that could force a sale. There's also this huge regulatory uncertainty. Plus, that financing gap is huge, right? It's absolutely huge, but it's very clever. I have to say, Trader Friends is very, very clever because, you know, like you said, there's a huge user base that Chrome could give Perplexity, more than 3 billion users worldwide. And if you think about it, it really makes sense. I'm going to push my another infographic up here for you. It makes sense because it'd be wonderful for it to already be embedded in and not have this At the moment, we all have these apps, right? Let's face it, right? This would be absolutely embedded in. And also, we are coming to a time where we're going to see AI just being offered everywhere. So it wants to steal the march.
Yeah, but the thing is, they already have a browser. So they built a browser. All they need is users.
They not only need users, Luke, but they need a lot of data that it can train its own software.
I don't know if it's necessarily a training thing, because they've got, I mean, Perplexity ultimately gives you the ability to search on top of different models anyway. So all these models that they've farmed out, they've got access to GPT's models, they've got access to Anthropic's models and Grok, etc. I think this is a bet for actually making money. Okay? What is Chrome to Google? Chrome is a gateway for everybody to get to the internet. Okay? What can Chrome do? It can track you through cookies. It can then build out better models of you and your profile to then sell your profile to advertisers. Okay, so Chrome is a gateway.
Cars and helicopters.
I was like,
I'm sure if you're listening, you know this is true.
Okay.
Cars and helicopters. Not that I can afford either, but
yeah. So it's the gateway. Okay, and so if Google's golden goose is advertising, which we know it makes the majority of its cash from, Chrome helps feed the profiles to sell into that advertising business. So if you cut that out, what is that worth for Google? Well, Google rallied yesterday. It wasn't rallying on the news, but it was having a choppy uptrend all afternoon. And I would say it didn't necessarily move as a result of the bid. 34.5 billion, whatever the number is fairly small relative to the value of Google, which is trading around 2.4 trillion. So I wouldn't expect it to move the market so much. But it is bold. What it is also very good at is if they fail, it's a fairly decent marketing punt from Perplexity, because they're all over the front pages today.
yeah. Win-win, right?
All over the pages. But as Boise says, it's not just the browser; it's also the Chromebook operating system. That's one. Interesting to note, though, one of the things that was defined in the deal is Chrome itself is a private entity within Google. However, the code base is called Chromium, and that's open source. And open source, it's fed things like Opera. I think it's even fed things like Firefox as the coding base. And that is open source. So Google have obviously taken that open source and they built it and they developed it and everything that comes with it. But it's going to be interesting to see kind of where it really settles. If we get a ruling over the next month or so to say that Google has to divest Chrome because it's got this monopoly, Perplexity are going to be there. They're opportune buyers. So that's going to be one that's interesting to see. I mean, I've got them as a Chrome add-on, as a bolt-on. So I just click a little button. You can add them as an extension, click a button, and you can just type it in. So for me, it doesn't change how I would use Perplexity. It doesn't change how I would use Chrome.
I'm a Chrome user too, as you know.
Everybody is.
Yeah. So Boise saying Chromebook laptops massive in schools. That's right. I've got a couple at home. So they get people into Google young. Yeah, it's all about, it's like your bank, isn't it? When you get them at university with a free mug, you're suckered in for life. I still have that Barclays mug somewhere. Boise saying Chrome is not just a browser, it's also the Chromebook operating system, as you heard Luke rightly saying. So Google will not sell it. This is going to be a tough battle. This is what I'm saying. Google is not going to let go.
Well, they don't need. They don't need to sell it. So why would they?
Yeah.
If they're forced into, then I suppose who are the backers? Amazon have got a huge advertising business. So we know that Bezos is a backer. Nvidia are also a backer, and SoftBank. So you've got to look at the reasons for why they would do this.
Yeah.
And I think Bezos through Amazon, could this just be Amazon's backdoor to try and swipe at one of their competitors?
Now, you want to look at one other before we went on to the timeline of Russia-Ukraine calls today. You mentioned one other stock.
Yes, that is right. I wanted to look at Circle as per Stephen's request. So Circle, they had their numbers yesterday. Let me just throw this up on my screen here. I'll bring the story if you can bring the chart, Ange.
Yep.
And I will have a look at this. Where are we? There we go. So they had their results yesterday. And they have, didn't have their results yesterday, had the results. They did have their results yesterday. Anyway, the big thing that was taken from the results is that they are issuing stock. They have noted that the stock has performed incredibly well off the back of its IPO, and they're selling you some more shares. How about some of that? We need to raise cash. We're going to opportunistically sell stock to willing buyers at crazy valuations because, as you mentioned, Stephen, the PE is now way over 600, I believe. And they're going to use that as an opportunity to dunk on their investors. So they were down 5%, a dilution effect, no doubt. It's never great for shareholders when they dilute you down that much. 10 million shares. So 10 million. What's the price of the stock at the moment? Have you got?
Definitely see a reaction to that. It was down 6. This is 153.29 is the current level.
Okay, zoom out a little bit.
Here we are.
Yeah. So it's above its IPO price. Is the more important thing.
Yeah.
And if you could click on the fundamentals up there for me.
Here we are, fundamentals. There we go. It's coming.
They've got the PE here as 235 on a normalized basis. And so let me just run that through. Circle Internet PE.
Let's take a look at tip ranks whilst Luke is looking at that as well to see whether we have a view. And we do analyst consensus there, 5 buy, 4 sell out of 15 ratings. And on the client sentiment side of things, don't forget, trader friends, this is a view of sentiment in the IG client universe. And it is 92% long, whilst 8% have short positions there.
Yeah, Yahoo Finance have the PE of over 2,000.
Yeah.
I mean, you're looking at companies like this, you're looking at companies like Palantir, and if I was a Richard McDonald and I was bearish, these would be the kinds of company that you'd be wanting to reduce exposure to, or when things start to turn, what do you give them a kick? You'd be wanting to kick these ones that just trade on a ludicrous valuation. It's, I don't know.
Yeah.
I don't know.
Neil, my man, good morning to you. And I'm a MacBook user, ChatGPT integrated through my Apple ID. I too am a MacBook user. I'm a Mac family actually, but by default I have to use other operating systems too, because you just have to, don't you? If we bought back everything, work.
Everything that works, all Microsoft.
Yes, everything that works on Microsoft.
And everything up there, yeah. But I think it is, the winners are going to be the ones that can distribute their tech, because what will eventually happen is they need to make money, right? And how do you make money is one of these language businesses. If you have to first run your own app, so you have people searching into your LLM to be able to generate results. You can also sell the LLM to enterprises. So like we've got a deal, we use Claude, so we use Anthropic's models. So we do a lot of our work and analysis using that, and we obviously, IG have paid for that. But to the mere kind of person on the street, unless you get a subscription layer, which they are often having at the moment, I think you can pay Perplexity 20 quid a month or 200 quid a month, depending on what access you want, or you can use it for free. They need to find a way to generate revenue. So if you know if I know what you're searching for on your GPT or on your Perplexity, cars and helicopters, can I now suggest things to you that drive you in that direction? Because what Perplexity do quite well is they ask follow-up questions. So I asked yesterday, because I didn't off the top of my head know what they were recently valued at. What were you recently valued at? And it came through, and then it had different questions. Now, could they get quite clever with those suggestions being you're talking about this. Did you mean you wanted to talk about cars and helicopters? I don't know how they would do it. You'd want to do it, subtly, so that the user didn't necessarily feel that they were being advertised to. But to me, that's the interesting part. There is.
What's also interesting is we are not yet at the stage of where they're at in Asia. So be interested, trader friends, if you know, please tell us whether it's to do with regulation or whether it's something more subtle, like we just haven't got there, the tech here hasn't got there yet. But over in Asia, if you watch, for example, a video of someone, I don't know, I'm just making this up, dancing with the brand new Nike shoes, but if you're on WeChat at the same time, it knows that you are watching this on WeChat, or your friend, your mate has sent it to you. It would immediately on the side, if you zoomed in on something on that video, it would immediately have a pop-up telling you exactly where to buy those shoes.
Yeah, but you get that now. You get that on YouTube Shorts, which is a Google company.
You do.
You get that when you're scrolling through Instagram stories.
Except YouTube Shorts doesn't offer to send it to you within 24 hours.
No, that's true.
Yeah.
So is that the play from Bezos? Is that the play? Because you can then advertise directly in as a click here to purchase. That's an interesting angle. That's an interesting angle.
Click here to purchase, that's right.
if it is Bezos behind the bid, they've just said that they've secured the funding. That's all they've said. Which actually reminded me, do you remember when Musk said that about Twitter? He said, I'll take Twitter private at 420.
Yes.
Funding secured. As it might throw back to that.
Well, didn't he get like into hot sippy bubble? And there's a lot of investigations.
Oh, he got into loads of trouble about it.
Yeah.
Loads of trouble. And then they obviously forced him into buying it, and eventually. But there's, I mean, look, you never know who's behind what in the kind of AI world, because Elon and Sam Altman hate each other. There's lots of competition between these big companies to try and win. You know, is this just another pawn? Because Perplexity is seemingly one of the only independents to come out that are not tied to one of the majors. Of course, Anthropic were financed heavily by Google in the early days as part of that alphabet structure. Perplexity, yeah, they're kind of just a startup, but have obviously raised a lot of money from a lot of major players.
Speaking of which, a key timeline that we need to talk about, which is coming up today, Trader Friends today. Those of you, I know you already talked about Rheinmetall and all that defense and how they moved. Monday they dropped, but now they seem to be recovering a bit ahead of the Alaska meeting on Friday. Whack up my chart, Trader Friends. I've made a handy timeline for you. The time is according to the Germans, to the Germans at 12 GMT. Read it out for us.
Oh, blimey, you might need to zoom in a little bit more for me.
Oh, yes.
And I've got my glasses on, but you're a little bit one-sided there.
This is for today, Trader
Okay, 12 o'clock
Friends.
today.
Yeah.
This is a meeting that starts between European leaders and a Ukrainian summit, and that's in Alaska, is it?
No,
or is this
one
a precursor?
is ahead. This is just like a video conference call ahead of that summit on Friday. So we have Zelensky there, we'll have the Germans,
Okay.
the Finns, the French, I assume Starmer, Italy, Poland, and a load of other people from NATO.
But not the US.
No,
Okay.
because that happens a bit later today.
Okay, scroll us over to the left there.
So to read us through 1300 GMT.
Yeah, here we go. Okay, so at the same time, or an hour later, there's expected to be a call between Trump and JD Vance. This is another listening exercise. So this is interesting. This is today's listening exercise to allow Trump to hear the European position before he has a listening exercise with Putin on Friday. Okay, so they're expected to talk about the transatlantic coordination on peace terms, European concerns about territory swapping, and NATO's role in the post-conflict security. Okay.
And Zelensky has already warned that any unfair deal without him in the talk is not going to hold. And interestingly enough, after that, there is one more call, which I think is the most important call of the morning, because this is the coalition of the willing meeting, and they'll talk about, how is this actually going to work, guys?
Contingency plans.
Here are the plans. Here's, contingency plan 1, contingency plan 2, if this happens. And right after that, last but not least, right, we have that Friday meeting. So this is a bit like the setup.
Zoom out on this one just so we can see what the text says.
Yeah, so the setup.
There you go. Okay, fine. So now we go. So today between 12 and 3 o'clock, we might see some headlines. Is that what we're saying? Yeah, there might be some headline risk.
Exactly. So if you're trading this, people, trader friends out there, do make sure that you are aware that these hours might give you some opportunities if anything concrete comes out.
That must mean JD Vance is back from his trip to the Cotswolds, right? He's being paraded around the Cotswolds, it looks like.
Yes.
Interestingly, he met, did you see the picture of him with Tom Skinner?
Yeah.
Unbelievable.
So
Tom
random.
Skinner, the ex, The Apprentice, and a bit of a social media enterprise, does a lot of the bosh stuff.
Yeah.
Apparently they've struck up a friendship on social media, him and JD Vance. They got a picture after sharing a beer in a pub in the Cotswolds.
Yeah, I don't feel like that is completely, unplanned, shall we say it?
Exactly.
Right, we're going to have to go, trader friends, because we've got a special guest, of course. Garth McKenzie coming up, and after that we have Piers Backworth as well back with us. So stay right there. Luke, always a pleasure.
Thank you very much. Never a chore.
Yes, we will keep an eye on Perplexity and we will continue testing.
It'll be interesting to see what Piers says about it as well.
Yeah. All right.
Cool. See you in a sec.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Brilliant. Welcome back, everybody. It is our good friend Garth McKenzie from Traders Corner. Garth, welcome back in the show.
Hello, Rich. Thank you very much. Good to be back. How are you doing?
We've certainly got plenty to talk about, sir.
We sure do. We sure do. There's lots happening. Markets are so strong, aren't they? Just feels like the pain trade is up, up, up and away.
And it has been for some time now, right?
Well, it has been, absolutely. And this is the thing, right? Markets always climb the wall of worry. And after that massive sell-off in April, it looked like the market would bounce and maybe chop around a bit. It just hasn't happened. It's gone straight back up in a V-shape to new all-time highs and continues to make new all-time highs. And I think the shorts are very much wrong-footed in this market, feeling the pain. And in a sense, that's perhaps also what's actually driving it higher, because it just doesn't feel like it's going to let up. Having said that, we are in what is seasonally a bumpy time of the year between August and September usually. But, those seasonal patterns, it's not a roadmap, it's just history.
Thank you. You are the first person I've actually heard say that. Michael Batnick, that does the podcast with Josh Brown, goes back to historical previous moves and seasonality every time. And I keep thinking, it's almost like, okay, I leave my house every morning and I'm crossing the road and I know that the traffic lights changes at a certain time every other day that I've done it. Therefore, I just close my eyes and walk across the road. It doesn't matter what's happened historically. Seasonality, it doesn't matter, because you've got a new thing every single morning that hits the headlines, right? It's something that people can trade off. It's what algorithms are trained on. Doesn't necessarily mean that it has any relevance at all.
No, look, I think that the seasonality patterns, I think, do have some relevance in that there's a reason why the August-September period is historically a little bit softer or a little bit bumpy. It has to do with Northern Hemisphere summer. Markets are often a little bit quieter. Traders go away, take a bit of a break. That might have something to do with it. But again, it doesn't necessarily mean that it's a roadmap. And just because in the last 20, 40 years, whatever, the markets have been weaker over this time on average. And remember, that's on average. It doesn't mean to say that it's every year that it's weak. Some years it's not. So it's something I kind of just keep it in the back of my mind and keep aware of it. But I don't think you can just rely on it blindly.
But I guess what you're alluding to is that the decision makers, right? We know all the hedge fund managers take their kids off school, go down to the south of France, go to the Italian Riviera, but they're not the ones that matter anymore. Algorithms don't go to the beach. CTAs don't go to the beach. You know, things have changed, and you know, they're up to the eyeballs. They haven't de-risked at all. It's full risk on in algorithm world.
Certainly feels that way. It certainly feels that way. And I think your point about algorithms not taking a break is actually very well made. And I do tend to wonder sometimes whether these historical patterns that we've come to listen to are not necessarily as relevant anymore as what they might have been in the past. Certainly this August, and we're only halfway through, but this August is showing us that be very careful to rely on that seasonal weakness, because it's just not happening. It just feels like, this market is I mean, I hate to say it, but it almost feels like it wants to melt up. And maybe that'll be famous last words, but it does feels like every dip is bought, and it remains very, very robust. And very strong.
Yeah, no, completely agree with you. And I'm one of them, right? I'm one of the ones that's short. Every day I'm having, yesterday I had to buy a call spread on the daily, 0 days to expiry, because I had to cover myself. I had to, I'm kind of losing, say, £3,000 every 1% we go higher in the S&P. So I try to cover that and maybe make 1,000 of it back on a 0 DTE, make 500 back on being long futures, because I know what happens every time the inflation number comes in line. The market blindly reads it as positive, so it goes up, 50 points. Yeah. So, you can try and fight it, but I will continue fighting and defending my short position, just trying to make money around the sides. But now I'm starting to buy stocks I don't want to own, right? Now I'm starting to. Yesterday I bought some Alphabet, and they're, because they're such an underperformer. I'm long Lloyd's, I'm long these underperformers, ASML, against my short of Nvidia, short of Palantir, short of the S&P 500. Another one I could have bought yesterday, and I should have bought, and I looked at it, and I'm kicking myself I didn't, was the Russell 2000.
Well, that's it. That Russell 2000 move yesterday was really interesting. So it was up basically 3% at the end of the session. Pretty much double the performance on the day of the S&P 500 and the NASDAQ. And that really comes down to interest rate expectations from where I'm sitting. Obviously, yesterday's inflation figures came out in line with what the market was expecting. So I guess people at the Labour Department were relieved. Maybe no one's going to get fired this week for sending out that information. Not that it was nothing unexpected, but the point is the market took that and said it looks increasingly likely that we're going to get a rate cut in September. And I think the odds of a rate cut in September are now up to 90%. And likelihood is we'll see another one in addition to that before the end of the year. Some are even suggesting we might actually get 3 rate cuts this year. That might be stretching things a little bit. But in any case, that's the way the market is starting to lean. And I think that those rate cuts will start to benefit those companies down the chain. And I guess that's why we saw the Russell 2000 so strong yesterday, because a rate cutting cycle would be very beneficial to those US-centric stocks, which you typically find a lot more of them in the Russell 2000, as opposed to the very global companies that are in the NASDAQ and the S&P 500.
And it's also a big underperformer, right? It was flat on the year until a couple of days ago.
Yeah, it has been an underperformer. And actually, just before we came online, I was just having a look at the relative chart of the Russell versus the S&P 500, because you're quite right. The Russell had been quite a significant underperformer. But if you look at a relative chart, you'll actually see that the relative strength chart of Russell 2000 versus S&P 500 is starting to flatten out. And in fact, those two indices have been performing neck and neck with each other over the last 4 months or so. And one could even maybe make the case that the relative chart is actually starting to turn the corner, which might imply outperformance to come from the smaller caps, which would get quite interesting because we haven't seen that for quite some time.
Yeah, and chart off please there, guys. I'm just going to have a look to see if we're getting the same in the S&P equal weight, because that's another one. I'd be happy buying the Russell 2000. I'd be happy buying the equal weight. You know, I would like to see, I'm just making sure I get the dollar one. Let's have a look at...
I'm doing it on my side here as well, so we can just talk about it once we've both got it up.
Yeah, so again, flat on the year. That must be in GBP then, because there's no way that the equal weight can be flat.
Let me just have a look on mine, just to double check you there. I've got it. It's up in dollar terms on the year it's about 5% up in dollar terms. That's the S&P 500 equal weight, up about 5%, but also technically starting to look better.
Yeah,
breaking through some resistance levels.
I could maybe get behind that. You know, I'd certainly, I would be very happy having that against my Palantir short. But I wouldn't be married to it. That's the problem, isn't it? That's the problem. But if you're right, so what do you think has to happen for us to get 3 rate cuts?
Well, I mean, let's have a look at what's driving the expectation of the rate cuts now. First of all, it was the labor statistics that came out last week, much weaker than expected. But in addition to that, it was the revisions to the previous months, which really got the market thinking, gee, actually the labor market's quite weak. And remember, the Fed's aims really are full employment and inflation under control.
Price stability.
Price stability. Now, the thing is, I think they've got quite a conundrum now because we're seeing this weak labor data coming through. So that is obviously a worry in terms of what it's saying about economic strength in the country. Weak labor data should be enough of a reason for them to cut rates. On the other hand, we've got this inflation story. Now, inflation at the moment seems to be mostly under control. As we said, yesterday's numbers came out in line with the expectations. However, what's not really reflected in those inflation figures yet is the tariffs, because most of the tariffs only came into effect from the 1st of August, right?
The $1 trillion that Trump has announced that he has taken in tariffs. So that $1 trillion are American companies and American consumers paying that. And as you say, they haven't felt that yet, have they? Because they managed to front load all the inventory in. So they've got the cheap stuff to sell. Now they've got to put prices up.
Exactly. So I think you'll only start to really see the full effect of the tariffs coming into the inflation figures, perhaps towards the end of the year. So what happens if we get to a situation where the labor market's weak, as we know, the Fed decides to start a rate cutting cycle, and just as soon as they start cutting rates, the inflation figures start to shoot up. What then?
Well, that's what Trump wants. Trump wants, because, you know, his own economic advisor has said, look, the economy is so strong, we don't need lower rates. We need lower rates.
Well, but that is also counterintuitive, isn't it? I mean, when I was at university, we learned that when the economy is strong, you raise rates
along with everybody else, Gar. And also,
I think that all those
when we're at the top of the business cycle, you're also meant to contract PEs. But no, not in this market. This market, we extend PEs.
Yeah,
exactly. Ray Dalio is pulling his hair out.
What's left of it, yeah.
Yeah. So yeah, we've got potential inflation going higher. We've got the Fed under pressure to cut rates. We've got the job market rolling over. but it's not coming through in earnings at all, isn't it? The earnings estimates for the year are probably 275 now.
Yeah, they're just 275. It depends who you listen to. I mean, I've seen up as close as 285.
Wow. Right. Okay.
But even let's say 285, right? I see you on your calculator there. Put that into a PE calculator.
I was texting my mum.
Ah, right. Well,
I'm joking.
My calculator is much older than yours. Yeah.
22.6 times.
Yeah, and that's expensive relative to history. But again, as we were saying earlier, relative to history, is it a roadmap? Not necessarily. Maybe we're in a structurally higher PE market environment now. But that's a debate for another day, I guess. I think the 10-year average PE is about 18, right? So that means that on a 22 times, we're sort of 20% above the average.
I do take the argument that is somewhat irrelevant now that you've got AI margin expansion. But we're also in a CapEx spending bubble. So there are companies in there, such as NVIDIA, that are benefiting from a bubble. And this is another thing I don't really buy into, this idea that NVIDIA, for example, right, the H20s, Trump is basically saying that the H20 is so obsolete that he's prepared to sell it to the Chinese now. Right? He's saying that Blackwell is everything. It's the super duper future of AI chips. These H20s, they're old. That's old tech. So companies that are spending hundreds of billions on this old tech, and then they're spending on Blackwell, are the Mag 7 just going to continually have to update their AI chip capability every 2 years, 3 years, like we update our mobile phones? Or is NVIDIA's sales at some point going to roll over or stop growing? Because they only need to stop growing for NVIDIA's share price to multiple to contract. And therefore, NVIDIA is stuck at $5 of earnings, which means it's on 35 times, and it should be on 25 times.
Well, I think that's the big question, right? Is that these shares are priced based on the current trajectory of growth, and as you say, earnings don't have to come down; they just need to slow down to be a little bit less rapid than what they are currently, and you could start to see these things unwind. So, I must say, from a broader perspective, I like I've kind of followed the Gartner hype cycle. I don't know if you know much about that, but it's all new technology tends to follow the Gartner hype cycle, and what it means is you basically go through a peak of inflated expectations, which is kind of where we are right now. Where markets are overvaluing the potential for this technology. Sure, it's going to change the world. AI is changing the world, and it's going to change the world, no doubt. Same as the internet changed the world back in the late 1990s. But remember the dot-com bubble, all of the stocks were overvalued, and a lot of them crashed and burned in the early 2000s. Now, could we potentially be sitting in a situation with this AI where that also happens? Now, I don't know where we are in terms of this early stage of the hype of the inflated expectations, but I certainly won't be at all surprised if we follow the same path that Gartner hype cycle typically projects for all new technology. The question is, where are we on it?
Well, I don't know. We're around about 110 times sales and 600 times earnings. That's where we are on Palantir. So, where is that in a hype cycle? When Cisco was 39 times sales in the year 2000 and then dropped 88%. Well, we're above it.
Yeah, exactly. But trying to call the top is always tricky, isn't it?
Oh, and expensive.
And expensive. So my take on it is personally is I'm not going to be trying to pick tops. I'd rather wait to see when the top has formed, and there will be plenty of time to get short if you're wanting to short it along the way down.
And
but trying to pick tops is dangerous. Tell
us how you identify that top, Garth.
Well, remember, usually these tops take time to form. It's not like the market, like a stock like Nvidia is just going to suddenly spike and then collapse the next day. It's going to take time. These things take plenty of time to roll over. And you'll start to see it in the technicals. You'll start to see price action breaking down below 200-day moving averages, etc. We're nowhere near that at this point in time. But I think when the time does come that you want to start identifying tops in these overhyped shares, the market will give you a clue. There's no reason and there's no need to be trying to pick the top.
So it's RSIs, it's MACDs, it's the 200-day moving average.
Yeah, all those sort of things. But I think just look at the chart pattern as well. You'll actually notice things start to top out. It stops going up, it starts going sideways for a period, and then you start to see slightly lower highs beginning to form, and that's when you then start to maybe pay attention that a top could be forming, and then thereafter maybe you start to look at the opportunity to put the shorts in if that's what you want to do. But I think trying to short it on the way up is very expensive, very dangerous, because these things can bubbles can inflate much more than what you expect.
Oh, absolutely. It can go to 150 times sales. Right, Garth, how about next week, or whenever we have the pleasure of your company again, we look at past examples of when such tops have formed, and we look at what are the key indications to look for.
Brilliant. I'm keen. I'll do some research and I'll do some homework. It's going to have to be in the beginning of September, I'm afraid, because you talked about people going off to the south of France, and that's where I'm going on Friday.
It's funny. So Kieran McKenzie, don't think I didn't notice your message there. The question was, do hedge fund managers not have phones? Yes, but they also want a holiday, right? If you're running $200 million of risk, what you don't want is P&L swings, as you had in 2011 with the European debt crisis, August the 10th, and you had the Japanese meltdown last year with the carry trade, August the 5th. You don't want to be taking calls all day and trying to defend your P&L against the risk management, shutting it down, when your wife is ordering a third cocktail of the day because she's annoyed at you.
Exactly.
Right, Garth, we're going to have to run. We've got Piers Buckworth in the background, but he'll be joining us in 2 minutes. Thank you, as always, and have a wonderful holiday, sir.
Thank you.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns. Cash returns, come on.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and Ideally, we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Okay, mate.
Straight in. Piers refused to ring the bell.
Yep.
That's it. London Stock Exchange. Get them on the phone. We need a new bell. Right, Eli Lilly is the top performer there. Let me update that and let's see.
Can we go, just one sec. Can we just start at the top again? Okay.
Go on. Started at the bottom, now we're here.
I'm just looking at the numbers. Yeah, so Eli Lilly, okay, great. So Eli Lilly is obviously took a blow the other day with their numbers. Most importantly, the efficacy or the efficiency, or whichever word you'd like to use, of their diet pill, which came in at 10.5% versus Novo Nordisk's pill, which came in at 13%. Now, this is very interesting because, of course, Novo just took a huge yet another huge sell-off on their warning the other day. But the bottom line is net, Novo are winning and trading as if they're going out of business, and in my view are just an extraordinarily level to be buying.
Did you send me an email saying that Wegovy also reverses age?
There was a study out a few days ago that essentially indicated that it reversed age by 3 years. So not only is it being these pills, and they're also
the same age as you.
Who was that? It was at Merck, Bristol Myers. Sorry, just let me quickly look at my Bloomberg here, guys. Sorry.
Well, that's really interesting. Weight loss and reversing age. I mean, sign me up.
and on top of that, there is there's a thing here. Who was it? I forget. One of the European pharmaceutical companies is looking to join forces with Novo, and also so it's diet, it's diabetes, and it's also Alzheimer's, all in the same pill. This pill is a super drug, essentially, by the looks of it. In fact, we should probably look into it. But the bottom line is what? Reversing age, Alzheimer's potential, diet pills. I mean, these things are blockbusters, to say the least. I mean, we all know that they've been on the market for a long time, and the market's now getting very competitive, and all the, there's jostling for position. But yeah, interesting.
And remind me, Wegovy is Lilly or?
Wegovy is Novo.
It's Novo.
Yeah.
Good.
And also the big boy Ozempic. Ozempic is obviously Novo.
Right.
So that's the big blockbuster. Right?
Okay.
And yeah, Novo have got a lot of cash on the balance sheet, and they're going to use it, I think. But anyway, so that's that one.
Our long-term play, Intel, massive day yesterday.
Big day yesterday. I mean, to be fair, there's every now and then you get a little layup trade, and the layup trade, of course, as I'm just going back to my copper comment from last week, was Trump coming out saying that Lip Boo needs to go.
Yes.
Right? That was one, and the stock was down 5% on that. Okay.
$19.65.
First of all, that's ridiculous. Second of all, he doesn't even know Lip Boo, by the way. So Lip Boo went to the White House, because he's a smart bloke, immediately. And he said, "Would you like to actually get to know me, Mr. President, as opposed to just assuming that I'm in bed with the Chinese?" And he said, "Sure." So he came over. He said, "Yes, Jensen." He goes, "That's not my name." So he sat down and explained his journey to Trump. And at the end of it, Trump said, essentially, this is not a direct quote, "Oh, wow, that's an amazing story." In other words, I had no idea who you were, where you came from, and this is fascinating. And to be continued. Scott Bessent was there, as was I forget who else. And there's going to be more to see here. But the bottom line is, Trump and Lip Boo, the CEO, are now kind of in cahoots with each other. That's kind of the spy nonsense has been put to one side,
yeah.
and now we're going to focus on what the strategy is, because this company is still looking for an identity. Because are they going to get rid of Foundry? Are they not? Actually, I think that a lot of it's got to do with that. Trump is very keen to make sure that the US have a Foundry. So for them to be winding down their Foundry, I would imagine is probably the undertone of what's really going on.
So he heard Intel potentially winding down, cutting jobs in the US. Boom, attack.
Yeah. Also, Intel, the only US hope for Foundry business, TSMC is onshoring and they're mates with Trump, but they're Taiwanese.
Yeah.
Intel are the only American born and bred foundry. So I would be shocked if a lot of this doesn't have to do with his fear that they're going to exit that business.
Got you.
Anyway, so that's that. And then we've got our friend Palantir that obviously made an all-time high yesterday for no reason whatsoever beyond the machines grabbing that CPI print.
Let's talk about that for a second then. Let's
do it.
Right, so let's have one last look at where we are for the morning. And
Disney's only up 42 basis points. Wow, it's bearish.
Right, okay, screen off. Let's get into it. So, Producer Phil, do you want to go to the next section on Tech Focus? Right, welcome to our specialist part of the week when we have the #1 tech analyst in my book in this country. It is Piers Buckworth. Welcome, sir. So,
lots
Piers,
going on as ever.
For anybody joining the show for the first time, Piers has been covering me for about 15 years, giving me incredible ideas. I've tried to argue as much as possible against him, and then it goes in my face, and I've given in and accepted that he's brilliant. So
here we are. So for those of you who have not been watching this show recently, we are at yet another extraordinary moment. I mean, let's just get straight into what happened yesterday. And we'll finish with a micro and start with a macro. Market is so exhausted to the upside, particularly in Mag 7. And just to be very clear, the S&P 500, which has 500 stocks in it, two of those stocks, are 15.5% of the index, which is Nvidia and Microsoft. It's an extraordinary situation, to say the least. Back in 1982, it was IBM and AT&T, and that got to 10.2%. So it's not so that was a big number, but 15% is a whole new ballgame. So the concentration is clear. Whether that's a problem or not is an open question. It's been debated for many, many years. I suppose it's only a problem if those two companies start to have problems, but there's no problems at the moment. So there's nothing. And every single time we have a potential moment where the market where the professionals, might actually step in and sell something, they have to step back again. And yesterday was a wonderful example. The CPI, all the whispers, all the hedge funds I speak to, everyone was gearing up for just a slightly hotter number. Because the expectation that tariffs are going to start to come into the number.
Which they got in the core.
They did get in the core. And the numbers were only not hot in the year-on-year number. The rest of it was kind of in line. And if you look at the detail, airlines were a big contributor. But net, it wasn't hot, and it wasn't, and it was
Goldilocks.
It was warm. It was yet another Goldilocks. So the professionals went, oh God, stepped back, and the machines and the retail went bang. And we're up to new all-time highs. And then, of course, when you get that situation, the futures the next day do exactly what they're doing now, which is sit, do nothing, and then grind to there.
Yeah, 20 basis points.
Where are we now? Are we off the highs?
When I woke up this morning, I opened my phone, and I couldn't believe it was only up 10 basis points, because it was guaranteed to be up 20. But now, of course, it's up 20.
Yeah, I mean, it's almost guaranteed, right? Because it's a machine.
Where the sarcasm is in our voices here. No. If you are trading this, then
let me clarify what I just said.
Yeah.
In the 20 years that I've stared at my screen all day, every day, the repetitive nature. I'm sorry. Let's just boil that down mainly to the last 10 years, when the machines and the retail and this whole phenomenon has really taken hold. The percentage when you get a situation like we just described. Everyone has to, you're at all-time highs, massive cash positions, volatility gone down to zero, and you get another bit of good news, and the machines ramp it higher. It is 90% plus of the time you see that happen.
Yeah, the next morning.
Yeah, and it's because there's nothing to stop it.
No.
And they're not, and again, just to reiterate, there's not human beings trading that. It's just machines doing their thing. Tick, 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 tick. Just, and we'll get a little bit of a dip on the Open today, in the US Open. Bang. That's 90% plus that's going to happen, especially because we haven't had a little dip yet. It's been ramped, right? And it's ramped again. So we'll get to the Open, it'll go bang. Then the question, and then it'll probably try and go bang. My view is that it's just all exhausted, but my view is irrelevant, utterly irrelevant,
yeah,
because we're not dealing with humans. That's my...
Agreed.
So, yeah.
Right, we've got a few questions coming in there, just so let's keep them in our mind. Micron, I don't know if you look at United Health, do you?
I mean, listen, I know what they do and I follow them, but I don't really have a strong view.
So let's add Micron to the list, but then we'll start with CoreWeave, shall we?
Yeah, so CoreWeave is one of the hot new things in tech, recent IPO. And for those who don't know the company, they've got a really interesting business model. They essentially are warehousing or setting up a massive data, GPU to be specific. What they do is they buy all of NVIDIA's chips off them, they warehouse them in data centers, and then they rent them out cheaper than otherwise would be to the hyperscalers. So it reduces the cost for the hyperscalers. They've got 200% revenue growth for obvious reasons. All the big hyperscalers are their top customers, but they have a huge amount of debt because it's a massively capital intensive upfront.
Right.
$15 billion worth of debt. That was the reason why the stock was down last night.
So this company is the picks and shovels. They're buying the picks and shovels and then renting
shovels
it
of
to
the
the
picks and
gold
shovels.
miners.
Yeah. I mean, it's a genius idea.
Yeah.
It is capital intensive, of course, but I have no doubt that this is going to be a winner. This stock. They have to deal with the debt, and at this, the cash burn at the moment is definitely a problem. And they might have to raise money. It's hard to tell. It's going to be a little bit volatile, I would imagine, particularly given how much. But let's look at the valuation of this company. Listen, it's fair to say that this is a hot AI stock.
Yes.
Right? Okay, there's no question about that. So let's put it in the same category as Palantir, shall we? 20 times sales, 200% revenue growth. Palantir, 126 times sales, 48% revenue growth.
Let's go through that again.
Yeah.
So what is CoreWeave's price to sales?
20 times.
What is Palantir's price to sales?
126 times.
And which one's growing faster?
By a massive margin, CoreWeave. Like literally, it's 4 times faster. So why?
So that price to sales comes down at a much accelerated rate. And CoreWeave, realistically, in 2 years' time, is at a normal price to sales.
Yeah, I actually think CoreWeave, I'm a bit worried about the balance sheet, to be honest. But again, that doesn't really matter. We all know that. Look at Meta. Every single time they open their mouth to tell us they're spending another 100 billion, the market goes bang. So, I mean, they're spending money in exactly the right area. So I think the market will get over that pretty quickly. But I think CoreWeave, I actually wanted to short this because it had just,
Yeah.
Then I went and looked at it closely and I realized that that's wrong. And I think that this is actually going to be a big winner. Question is, where do you buy it?
Yeah.
Now, it's off 6 or 7% pre-market, so perhaps...
down 9.
I personally, they only listed a couple of months ago, right? So I like to give companies 3 months or a quarter, at least a quarter, if not 2, as a public company to get a feel for what's going on. Plus, it's hot, right? It's really hot.
Any negative rhetoric in AI and this thing's down 15-20%.
100%, yeah. I mean, this is high. This is a high beta play on AI.
High beta, high risk.
I mean, this is like NVIDIA on steroids.
Right. And Jensen invested
with a debt problem.
Right. Okay, next.
Yeah. So next up, what have we got? Questions?
Do you want to have a look at Micron?
Sure. Micron is Donny 1. Micron is, listen, there's a few people who have tried to come out and sell this. Brokers have come out and tried to sort of downgrade it, but that's 2 out of, let's say, the top 20 analysts. The rest of them are all big buys on it. They just raised their guidance again, not only in DRAM, which is obviously the nuts and bolts of their business, but also AI, which is the new part of their business.
Take everybody through what DRAM is, sorry.
So DRAM is direct random access memory, which is the most commoditized, old-fashioned form of memory. When I say, so this is why this company is a cyclical company. It's just the same as being involved in copper or whatever it is. It's a commodity, whether it be copper or DRAM, that goes in cycles. There's nothing particularly sexy about it.
No scarcity.
It's a hard investment. Now they've got a secular bull thesis under them, which is the AI and the high bandwidth memory, which is being tailored specifically to the likes of NVIDIA, who are their new customer. So these guys are going through an inflection point. So AMD, I mentioned this a while ago. AMD has gone through their inflection point. Micron is also going through an inflection point. Finally, all right. This has been a battleground stock for many, many, many years.
Yeah.
It's a bit like Freeport, actually. It's very similar to Freeport, right? It's exactly the same. One trades on copper, one trades on DRAM. and it's got a similar price action, and that's just the way it is. But this is a different kettle of fish now. It had a huge breakout, a pullback from that, consolidation, now raised its guidance again. So, and it's cheap, right? This is one of the only ways to play AI that's cheap. And that's
not that people pay attention to valuation anymore.
Not that it matters, but you know, the big funds do, right? So the long onlys who are considering adding a value name, whether it be Broadcom, everyone in the world is already long Broadcom, and then you've got Marvell and you've got Micron as options, which most people I would imagine are not long. And when I say people, I mean professional people. So the answer to your question is I really like Micron. Particularly after they've just raised their guidance again, which basically just is a middle finger to those people who downgraded them the other day.
Okay, so
I'm just a bit, yeah, so just, yes, buy it on dips would be what I'd say.
But conviction level?
A conviction level for Micron.
It's not in your portfolio.
It's not in the book, only because it's just not in my nature. I was keen on Micron about 80% lower, because that's the way my brain works. I'm really bad at chasing things. And I need to get better at it because that's the market we live in forever. But yeah, I love Micron, but I'd wait for a little dip because it is a volatile stock. Remember that. Yeah. This is not Nvidia. It's not my Mag 7. It does have volatility, and that's just the way it is.
Which one of the European names is the DRAM name?
There's none in Europe. No.
Right, okay.
No, the DRAM names are Samsung, SK Hynix, Micron.
Okay. Now, our good friend, the Marvell.
Marvell, yeah. So they, again, this is in the same boat as Micron, right? It's not a popular long with the mutual funds and the long onlys. A lot of people don't understand what they do, and it's going to take some time, and it's subject to volatility, and it has random days up and down. Like yesterday was a great example. It was down. The day before yesterday, it was down 2%. Every other stock in its group was up.
Yeah,
it's completely random. It's one of those stocks. But if you look at the chart, it's held on to the technicals perfectly, which is encouraging. I just think this is one to own. I own it in the book. Happy to own it here. And the major reason for that being that no one really knows what's going on here, and it's going to surprise to the upside, and it's not remotely crowded. Technicals have held in, and it's in a great space. So, and also don't forget when this thing can move, right? When people decide, oh, it's time to get into Marvell again, it really moves.
So we are looking at stocks here that analysts, i.e. the professionals, or at least they used to be professionals. Of course, if you're Jan Hatzius,
dumb money.
You're no longer a professional. You are Trump's idiot.
Oh, really?
His joker, jester. But these are people that have looked at these companies for 20, 25 years and are the experts. And they're saying they think, similar to Micron, Marvell has 17% upside against saying Palantir has 17% downside.
Yeah, so again, but just let's just be clear about analyst recommendations. Yeah. And listen, I don't want to be just sounding like I'm being rude to analysts who work very hard and obviously understand these companies, but just the nature of the business is that the analysts' recommendations are just basically just kind of irrelevant, right? Because they're either chasing the stock after the fact. You never get an analyst coming out and going, right, I like Marvell because this is what's going to happen in the future. You go, I like Marvell because they just said this, which is kind of pointless. Yeah. And then if they warned next week, they go, oh, hang on, okay, now I don't like Marvell because they just said that. So there's no view being said. It's just literally
it's like technical analysis.
Yeah, exactly.
Well, sorry, we've got Axel on next. He'll kill me.
Pelican. I don't know Pelican, mate. I'm sorry.
No, Pelican is the.
That's the name. Sorry, yeah.
A good friend.
Oh, Texas Instruments. So which IPO? So thoughts on new IPO? Which IPO?
So it's called Bullish. There is a stock coming called Bullish.
Oh, really?
Top of the market.
Sorry. Are you serious?
Right. There's a 15-second delay. Producer Phil will beep you out.
Great, good news. But I mean, sorry, that's my reaction to this. I mean, this is the market we're in. We're going to have a ticker code with Bullish.
No, the name of the company is Bullish.
Yeah, that's what I'm saying. Like, so what's the ticker code? Bull.
Yeah, probably.
Wow. This is I mean, wow, here we are, mate.
anything.
Why are we not doing this?
Yeah.
This is insane. Okay, fine. I mean, what are my thoughts? I don't know this IPO. I'm going to go immediately and work it out, but what a ticket code.
Yeah.
That's even better than having blockchain group as your ticket code.
So, Boise, thank you for sending me this yesterday. It's the first time I had heard of it as well. Now, where... Sorry, I think I'll have to find that later. But, right, what have we not covered? Because Angeline wants to come in and grill you for 5 minutes.
God, I mean, there's always more to talk
Soundhound
about.
was a great recommendation by Piers.
Oh, great. Nice to know at least someone's listening to me on this stuff.
Blake.
So, yeah, I mean, Soundhound, they smashed it. 217% revenue growth versus 150 last quarter. EPS was minus 3 cents versus minus 5, which is obviously getting closer to profitability and ahead of expectation. And yeah, I mean, what more do you need to know? This is still very expensive, right? But 217% revenue growth, 110 times sales, still very expensive. Still a bit of a battleground amongst the analysts, but it's on track. And I, 16, 17, I'd kind of look to take profits and wait a bit from a short-term perspective.
Wonderful. Mate, I would love to chat more, but I do have to give Angeline a chance to grill you.
No worries.
So we'll see you. We're going to do a very quick turnaround. Don't go anywhere. Stop it. I saw you getting up to go make a cup of tea. We'll be back in 1 minute. Like and subscribe while you're waiting.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an I've been waiting outside, waiting for my turn to grill Piers here. Rich starting you off, and then Ange's here to finish you off. On that,
Wow, we're really cooking with gas this show.
On that note, we've missed you, Piers, because I've been, thinking about you all of the week when we've been seeing this constant trickle into the White House, kissing of the ring there.
Yep.
The Tim Cooks, all the interesting things coming out of the tech sector, Nvidia, AMD. I mean, where is this all going to take us? Where is it going to end? Are we going to see loads of tech companies just, bending over backwards and saying, yes,
well,
whatever you wish, Mr. Trump?
Listen, I've said this for a decade with regard to Trump. You can love him, you can loathe him, you can take bits and pieces of what he does and think it's crazy, but on the whole, there's a big genius about him. And it's all very grey and very weird and very difficult to digest, but it's continuous and it's endless. And he did it the first time, and now he's doing it on steroids. So
it's like a spell, isn't it?
Yeah, I mean, and listen, he knows he's a deal maker, right? He knows what he's got, he knows what they've got, and he does a deal. I mean, listen, this Nvidia AMD thing, where he's basically got them to agree to give them 15% of their China revenue.
Where does it end?
It's got the word, but where does it? I don't really like the precedent that sets, because where does that end? But at face value, if it's just those two companies and it solves the China issue, it's genius.
That's what I do. I make deals.
It doesn't really make much difference to their top lines, really. A little bit, but again, the market doesn't care, right? All the market cares about right now is that inflation print and just the overall vibe.
Yeah, and we talked about algos. I heard you talking about this with Rich as well. Aside from algos, you think maybe the whole kind of passive investing that we've seen in the US is being transferred over to Europe as well? Is that also feeding the algos?
Yeah, I mean, listen, it's an open question as to how much the retail and the algos I mean, the algos is not up for debate. We all know that there's a lot of passive money being and a lot of algorithms trading Europe, but it's a completely different kettle of fish in Europe, right? I mean, the retail thing cannot be understated. It is where there's just hundreds of millions of people, whether it be using AI trackers, copying other people's trades, or doing their own trades on a really fancy computer game-looking app called Robinhood, or many of the other ones that also look like a computer game.
Do you know what it reminds me of? It reminds me of Tron.
That's terrifying.
The colors and the movement and
you sit next to someone on the train, for example, on the way home, and they're sitting there with this beautiful, colourful screen of whatever trading app they've got on, and they're just going, and they've literally got a menu of stocks, and it's the Magnificent Seven and 10 others. We all know the names. And they don't know what the sell button may as well not be there. They just press buy, and they've got feeds. It's just rigged, and it's not going away anytime soon, if ever. And we need to take note of it. And as I was saying to you off air, the only thing that stops this is when the professionals step in and sell it, and that only happens when we get a macro event. Yesterday would have been a good example. If we'd got a hot print, would have got whacked.
Do you think lots of fund managers just waiting there?
Well, listen, I don't know. I mean, I only speak to 15 hedge fund managers on a daily basis. Is my sort of little world. But
Pelican saying, enjoy the madness and
none of them. Yeah, well, there we go.
Yeah.
But what I don't know what that means. Enjoy the madness, because anyway, whatever. So. It's not everyone, but like all the people that I speak to, which is a cross section of hedge funds who sit in London, Geneva, Hong Kong, all different types of personalities. Even the most bullish ones have cut their AI trade and are respectful of what we're dealing with here, but they're just not chasing it up here. Right? And everyone's bullish now. I mean, on TV, like you look at some people like Rick Reeder, who runs BlackRock's fixed income. He's the head of asset allocation at BlackRock. He's a smart guy. And he was just saying some amazing stuff yesterday. I mean, they were saying to him, what do you think of the market here? Like right here. And he said, I think
maybe these people have been, bearish for such a long time.
Yeah, I mean, so many people have. It's less so in America. In America, there's a lot more who embrace what's going on and trade it. But the rest of the world, Europe is a wonderful example, right? The Europeans hate this. Right, everyone's grumpy and they don't like tech, and they don't like growth, and they don't like valuations that are that high. It's not in the culture. So hedge fund managers who sit in Europe in general are quite bearish, particularly on what's going on right now. But anyway, it is what it is. Listen, we probably would have sold off if it were not for the CPI. But then the machine stepped back in, and now like today, I'd love to know if anyone can dig this up, the number up. I'd be really. We're very interested to see what it is, what the actual participation is. It's impossible to really get a number of humans in this market today.
Compared to computers.
Exactly. I'd say it was, and retail, I'd say probably 5% humans, which is a very small number.
Speaking of computers, I love it when you come in, Piers, because my favorite stock of all time, NVIDIA, 183.
You and everyone else on the planet.
I just want to know, we're whacking up the screen for you because obviously everyone's waiting on the Blackwell super chip, the GB200. We saw that deal recently, NVIDIA and AMD. Is the trade now, because everyone's watching that 200 number, right? Is it get out before level. 200? Yeah, the level. And then sort of get back in and pile back in if there is a correction. If there is, trader friends, a correction. Let me just take you through some of the key details of what this GB200 can do for you, trader friends, and for the markets. It is meant to, in very simple terms, make everything super, super fast. It's got, if you are like me and you look out for the exaflops, petaflops, whenever Jensen Huang talks about it during the press conference, then this is 1.4 exaflops AI performance there. All this means to you is that it becomes even faster, and it allows the system to do all the things that are needed for the likes of, the humanoids that Tesla's Elon Musk has been talking, anything that is like a Neuralink, helping everything from construction to doctors, try to find any sort of cure for diseases faster. So in this sort of respect, in this sort of performance leap, if you like, from what it now sells, the H20, the H100. Take a look at that bar chart there. I'm going to try and zoom that in for you because they sell this to every big tech name known to humankind, right? Are we still at the precipice of a longer term bull trend, or do you think actually we're really due a correction? I know you think it's really expensive.
I don't think that we're due a correction. I know we're due a correction.
Okay.
Whether listen, the price action that I'm looking at in Nvidia is totally and utterly exhausted. Yesterday it managed 40 basis points, right? It was down all day long, and it managed 40 basis points purely because I guess the machines just went ugh at the very end. I can't see in the short term how Nvidia can go any higher in the absence of some news that we haven't heard of. It's probably the poster child for exhaustion in Mag 7, that and Microsoft. So yeah, my thing. Listen, if you're long Nvidia, is this the all-time high? I'd be very surprised. Of course not. Probably not. Who knows? But in terms of the short term, it's just exhausted, utterly exhausted.
I agree, but we've been in this place for a very long time. Take a look at that chart.
Yeah.
We're talking about that.
We have. I mean, look at it.
Since April, mid-April.
This is not going to continue, right? It will end because never has there been an example in history when it doesn't end. Question is, does it end today, or does it end in 2 weeks' time, or does it end in 4 weeks' time? I don't know the answer to that question. All I know is that there will be a sell-off. Something will happen.
There will be.
Because that's what always happens.
It always happens, but then will we just see buy the dip and it pick back up?
Yeah, that's fine. That's a separate question. Yes, we'll probably buy the dip in the market. The problem is that everyone on earth is going to buy this dip, depending on what it is. Because in my experience in markets, when everything is just as there's not a single thing. If you ask today, like the market is just on high as it could possibly get. Everyone's bullish. The price, there's no volatility. It's just the best thing ever, and that's great. But something will happen because it always does, and it's most often something that no one's predicted. A bit of news, something, whether it be DeepSeek. You know, we were all cruising along with no concerns in the world, and then DeepSeek came out, and that was down 22% in one day. Something like that. Who knows what it's going to be? Will happen.
Donnie One coming online saying this bull run since April has been amazing. That's right. And also loads of people coming on talking about, you know, risks and perhaps on tariffs as well. Do you think we might have potentially some sort of black swan event linked to tariffs? I mean, beginning of the year, we thought it would be tariffs, but it hasn't come to pass, has it?
Predicting black swan events is a completely futile exercise and conversation. Who knows what it's going to be? I mean, I'd be surprised if it's tariffs.
Yeah, everyone talked about inflation coming in. That hasn't come to pass either. Speaking of which, that's softer than expected, or rather the market taking it as a softer than expected reading of CPI yesterday. Do you kind of buy in, Piers, to those comments now that, you know, the data is being meddled with?
I mean, again, how do any of us know the answers to that question? But I really hope not, because we're pushing the boundaries of a dictatorship almost on a daily basis. If they start cancelling out people who give them the wrong data, which happened with the that labour market data the other day, then where does that leave us? So there's a lot of things that make me feel a little bit uncomfortable, quite frankly. But this is the thing. The thing is that thinking about the market too much, and also having experience in the market and having just overthinking it, is a disability most of the time. It's much easier to be a retail investor just playing the momentum. It's so much easier, but that's not what I do for a living. So it's very hard for people who do this for a living right now. Because if you're managing a book, which I do, I manage a book for a client, and you can't just be buying Palantir, but you can't be doing that, right? Yeah. It's not responsible and it's not sensible. You have to make money in a responsible way. And you know, if you're just punting around on an app, good for you, but that's not what the professionals are trying to do. So it's a strange moment.
Marcus Kane saying silicon tulips in response to that. Also, we've got very little time left. Just want to quickly check Palantir is the very last one, because Palantir also moving higher, 188 at the moment. Many of our clients and trader friends here asking whether everyone's watching that 200 figure. Your thoughts, get out before 200 or stay in? What's your call, Piers?
My call is if you're long this stock. So we're talking about Palantir, sorry.
Yes, we are talking about Palantir. RSI now showing
Who cares
severely
if it goes
overbought.
from 187 to 200? If we all know it's going to come back from there, sell. Why would you bother? Unless you bought it yesterday, then great, hang in there. But if you're long this stock and you've made good money, what are you doing? Are you waiting for 200, knowing that it's going to sell off there, which it will, because it'll be massively overbought and there's no other price targets above that, and that it just will, even if it's a short-term thing. So we'll end up back where we are anyway. So the answer to that question should be, I think, fairly self-explanatory. You can sell here, and then watch it go to 200 and end back up here, down here, or just sell here.
There you go, Pandy. Question asked for you. Right, any other questions for Piers? Hit the like and subscribe button, because then we can bring more of this expert analysis to you. Of course, this is driven by the community. And also make sure that any other questions you want to send to Piers, send it to us on IG.com and I'll put it in front of him. Thanks so much, Piers. Good to have you on.
Yeah, good to be here, albeit frustrating at the moment, but fun.
We've got Charting Crypto up next with Axel, so any questions, do put them on the chat.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
We're watching a crisis unfold in the UK, and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset, with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs. From scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello and welcome back to Charting Crypto. And first of all, I'd like to thank Chris Beecham for filling in for me whilst I was on holiday. And as you can see, I'm coming back tanned. I'm bringing back the nice weather from where I've come from Turkey. And apparently, I'm also helping boost global markets and cryptocurrencies as well. As we saw yesterday, the inflation print in the US came in rather steady. And basically, investors took that as a sign that the Fed is going to cut in September. And the probabilities for a Fed rate went from 88% to about 94% yesterday. So it's nearly being priced in with 100% probability now of us seeing a 25 basis point rate cut in September. And probably we'll see another one at the end of this year. And all of that has led to the world global stock index, for example, making new all-time high. The Japanese Nikkei 225 hitting its sixth, I believe, consecutive all-time high. Nasdaq, S&P hitting all-time highs. Even Vietnam hitting all-time high, and cryptocurrencies as well. And we thought Ether yesterday rallied very strongly. But before we talk about Ether, let's talk about Bitcoin, because that's the one most people are interested in. And we can see here that Bitcoin is rallying and is also heading higher towards our 161.8 Fibonacci extension that we mentioned many moons ago. And I love those, because if you have a Fibonacci extension on your chart for all-time highs in the future, you don't know when it's going to be hit or if it's going to be hit, but you have that as a reference point. And when the market then comes to that level and reacts off it, you can see that they can be quite powerful. And what we saw here, you can see I had a 161.8 Fibonacci extension just around the 122,000 level. And we hit that in July, went slightly above it, but didn't close above and then came down again. And then interestingly enough, we saw on Monday another retest of that Fibonacci level before coming off again. And we are still heading higher, as you can see on the daily chart. And everything is still looking bullish, but the advance is less steep than it is for other cryptocurrencies, and we'll get to that later on. But what do you do here from a trading perspective? Well, I didn't mean trading, from investment perspective. If you are still long, if you are holding Bitcoin, then yes, the trend is still your friend. You can see we had a correction between the mid-July high and the early August low, but that can be seen as a sort of ABC Elliott wave correction, and that seems to be over. So basically what I'm saying is, from a technical perspective, as long as we stay above the lows seen here in early August, in this case I think around $112,000.57, there is no reason to get out of your long holdings of Bitcoin, because the trend is your friend, and the medium-term trend, as long as we hold above that reaction low, is still bullish. So what can we see if we were to break above these highs, the high we saw on Monday and also the July high, and in doing so above the 161.8 Fibonacci extension? Well, what you then do is you look at longer term time frames, and what we've done here, you will see on the monthly chart, I had my Fibonacci extension target here, and that was basically made going back quite a long time, and basically projected from the lows down here in December of 2022, and that's now being hit. But the next bigger one is another 161.8 Fibonacci extension, and this one here is basically the move down from the December low to the highs seen in March 2024 and then projected higher, and that one comes in around the $150,000 mark. So that could be a longer term upside target for Bitcoin if we were to take out these recent highs. And as you can see, the momentum is still pointing to the upside, with further upside looking likely, or more likely than any downside. Now, if you believe that Bitcoin might fall for you to have perhaps a better entry level, it would have to fall through this uptrend line that goes back to June, as you can see here. For this view to be invalidated, and to be quite honest, we would have to fall through the early August low for the bullish view to be questioned. So Bitcoin still looking bullish, but the rise we saw yesterday was around at 1%. And if you compare that to the rise we saw in Ether, it was a very muted response. And this is Ether. As you can see here, a very strong up move. We've risen about 13% in just the last couple of days. And yesterday, I think we rose by 8%. So how come we have this outperformance of Ether compared to Bitcoin? Well, what is happening is basically investors look at Ether now on its strong own merits, and not just in the context of it coming after Bitcoin, if you want. And basically what we saw is robust inflows into US spot ETFs. And we saw more of those happening than into Bitcoin yesterday after the inflation print in the US. And this has basically been on the back of more investor confidence in Ether being seen due to its recent network upgrade. So basically investors are now, or seem to be, shifting away from Bitcoin ETFs into other ETFs such as Ether. And that's why we saw this huge advance. And technically speaking, what we've also seen is, if I go onto a weekly chart here, that basically we have broken through some really key resistance. And that resistance, as you can see here, I wrote down support because that is now, because of inverse polarity, become support. But can you see that resistance made up of the March, May, and December 2024 highs was being broken through in a week, last week, in one sweep go. So that tells us that there is a lot of momentum behind this move, and that further upside does look more probable than any downside reversal in the short term, at least. So if you have resistance capping the market and then being broken through, everyone who in the past went short, for example, here, now needs to scramble to buy back their shorts, and that's why this push to above that resistance area has now occurred. Now, what are the next upside targets? Well, if you go to the left on my chart here, on this weekly chart, you can see the next target is the November 2021 high, and that was made at 4,867.95 on Ether. And basically, that is the all-time high, I believe, as well. And you can see here on the monthly chart that we are now basically within 6% of that all-time high being reached. And basically, Ether looks very, very bullish because of what I've just mentioned, and also from a technical perspective. Now, what is also interesting is if you look at the spread between Ether and Bitcoin here, you can see this acceleration I just talked about as well. You can see that Ether basically outperformed Bitcoin from the early May lows. Then we had sideways trading, and then we resumed the trend in mid-July. And then the break out of that resistance area had the July highs in early August really catapulted us up to this high here. And if you look at the monthly chart on Ether, versus Bitcoin, you can see that there is a lot of space left for us to head higher. So perhaps this is the beginning of a larger Ether rally from a long-term perspective, as investors, institutional investors, that is, basically perhaps also now start investing in Ether and not just in Bitcoin ETFs. So what we need to look out for from a longer term perspective here is whether we can break through this long-term downtrend, which goes back to the all-time high in 2017. And just below there, we've got another downtrend, which you can draw in from the September 2022 high. And that one is currently in the process of being broken through. So let me just make this line slightly thinner so you can see that we are currently trying on a monthly basis to break through this 2022 to 2025 downtrend line. If that were to be the case, you would expect the long-term downtrend line to also be hit. And that currently comes in slightly higher here, as you can see. So this is the spread between Ether and Bitcoin. So basically telling you that the odds are greater for Ether to continue to outperform Bitcoin in the near future. Now, I've also had questions to do with Cardano, I believe. So let's have a look at Cardano and see what this looks like. Cardano, here we go. And called it Cardano, of course. Been away too long. Basically, what we can see here on the monthly chart is that we're also bouncing back. Basically, all the cryptocurrencies are rallying on the base of this risk-on sentiment that we're seeing in global equity markets anyway, as we are in this Goldilocks scenario at the moment, where basically we did have an inflation print which was steady at 2.7% year on year, slightly below the 2.8% we expected. But core inflation did rise slightly over the last 6 months, and thereby we would still expect the Fed to cut rates, and yet the inflation rate, the core rate, is reflecting a slight increase because of probably the tariffs, but the tariff impact on inflation in the US hasn't been as great as investors feared, and therefore we've got this relief rally going on now. And that bullish sentiment is also filtering through cryptocurrencies. And you can see with Cardano here that we are also heading higher towards our high that we saw back in July of this year. Now that is slightly higher at 93.39. And you can see here the momentum is still putting high, is still looking bullish here. Basically, as long as we stay above the last reaction low, and that low was made on the low on Monday, and that same low you can use for any other cryptocurrencies as well, because that's the last reaction low. So if we were to fall through here, perhaps this bullish view might be invalidated. If you go, for example, on Solana, I'm going to publish something on Solana later on today. You can see here that same on the daily chart low on Monday here as our last reference point, and on a medium-term perspective below this low here at the beginning of August. But yes, all the cryptocurrencies are heading towards the July highs, and the same is the case, as I said, just here with Cardano. Well, if you're holding Cardano, it does look as if we are bullish at the moment, and that bullish momentum may well continue in the future. As you can see here, we had a consolidation phase on this weekly chart and held since February of this year around these lows here, around the 51 mark or so, that's 0.51 mark, before then starting to move up, then a correction lower, and now another leg up. So I would expect the second leg up to perhaps take us back up towards these highs seen in January of this year and also in March of this year. That would mean around 112 to 116. That is a distinct possibility if we were to rise above the July highs. But short term, you can see on the weekly chart, we have bullish momentum, and that momentum is more likely to continue than for a bearish reversal to happen. Now, with regards to the data, which may drive this move higher, next week we've got basically inflation data in Europe and also in the United Kingdom, but I don't think that's going to have much of an impact on cryptocurrencies because they are far more focused on what the US is doing. And the US has now had, the big data out, non-farm payrolls, CPI. Yes, we might see PCE inflation, which the Fed prefers to look at, but with a probability of 94%, according to the Fed Watch, the CME Fed Watch, of investors basically expecting a Fed rate cut to be seen by 25 basis points in September. The current bullish momentum is likely to continue, especially now where Western Hemisphere countries basically are on holiday and perhaps trading volumes are slightly lower, which means that movements, swift movements and volatility can actually increase, and we can see further momentum take us to these recent highs with regards to cryptocurrencies that we saw in July quite easily. I've gone through Solana, I've gone through Cardano, I've gone through Ether. I think I've answered all your questions, and basically that leaves me with hoping to see you back next week. Thanks for watching. Bye.